All right, December 27th, 2022. Today's a great example um, today's a great example of having our spreads change on us due to liquidity differences. And this is what I was talking about just the other day. So instead of seeing like 3 pip stops that we can use today, we're actually using 1.5 pip stops just based on the liquidity in the market. Doesn't mean that the markets have slowed down to a point where they're untradeable, which is something we were, a couple of years back, we'd all be sort of saying to ourselves. So let's get into it. We've got a high time frame outlook. Let's go by our 1 hour charts over here. All right, and so over the holiday period, we had this primary form here, this buy primary on the 1 hour time frame, or potentially was forming, I should say, at this point. And I had on my charts, written that it was potentially forming, and so I was always looking for a potential buy primary to form in and around this lower sort of quadrant, because we'd had this sell primary form. I'm on the right hand side of the screen here. And because the sell primary form, and what we've seen in this very complex range was, as soon as a primary is formed, the opposite direction is formed as well, which tells us that we're definitely in a high time frame range and need to sort of zoom out to get the correct primary on our sides, right? So this buy primary was potentially forming. We thought we maybe had a formation coming in, and so all we were waiting to do is to see a lower time frame primary form, right? So range initiation, they broke structure up here, come down, take that liquidity, and we were waiting for this break in structure, right up here. This is where the market's closed right here, this sort of doji candle. So it gives us, it was a perfect place for them to close, because it was like indecision. It was an indecision moment. It was we're either going to come up here and break structure, or we're going to continue our prices down. My bias was always that we're going to have lower prices because of what had just formed, which was a sell primary with a lovely sell range in the middle. Here's that doji. So we woke up anyway to seeing that we had broken out and created a buy primary. Let's clean up the chart here. Create this buy primary, and in the middle of this buy primary is this range here. So what do we expect that range to do? To hold price, right? It's also a primary because it did take liquidity, so it's a very strong range. We definitely expect it to hold price. If not, if they do want to do something a little crafty, they can come down, take liquidity from beneath that range, and initiate higher prices. But it's unlikely that that will stick, because of we're in this complex range and we are initiating away from the last known unmitigated sell primary range on a higher time frame outlook. So we do definitely think we will be changing from this buy primary into a sell primary and initiating those lower prices. This is what we've been doing in this range. Every time we create a buy primary, a sell primary will form almost immediately after. So let's see. So that's what our outlook looks like. There's one thing I wanted to point out is on this buy side chart here, we've got a transitional order block mitigation, which will become liquidity. Absolute certainty. They always will take the liquidity from the transitionals. It's just a matter of when. It will be relative to this time frame that we're on right here. So we're on a 1 hour, so we don't have to expect it to come back straight away to take the liquidity before initiating. They could totally initiate prices lower and lower, and then just use a news event or something like that just to wick in, wick out, take the liquidity they need to take, and then initiate prices that way. They could also build upon what they're doing right now, which is mitigating from this range, pushing price above right here to have an actual proper mitigation, which could be something in here, 15-minute, 5-minute zone. We'll have to have a little look, see what's in there. I don't think there's much in here because it was such a fast movement. Okay, so let's go down onto our lower time frame, see what happened today. Let's pull down into a 1 minute. Okay, so there's a few things on the chart here. It looks a little complex, but it's not too bad. First trade of the day was this, it was a break-even buy trade. You can see why I was thinking it, because of the connecting range, but let's talk about it. So prices come in down into this range. This is where I get to the screen after seeing this formation of the buy primary has completely formed, And so we expect a RIMC, right? Range initiation, mitigation, and continuation from here. So as soon as we see that put in, I'm looking at my ranges inside of the B to C leg. So anything that occurs inside that B to that C point here, I'm very interested in seeing what happened. I identify this very weak looking primary range, but nevertheless, it did form within the B to C, and so we have to give it some weight. I believe personally this will become liquidity, and that this range down here will hold somewhat, is really my bias, I guess you could say. So as I'm waiting for price to come back into that location, I'm also looking at what we're doing. So as we've initiated prices away, we create this one range here that connects and breaks structure, right? So it connects to this primary range. This is just a standard range initiation break a structure. And so, but as it's the location that's interesting because it was a connector, because it connects to this primary. So we can expect that there should be a reaction of sorts. Depends on how they're building liquidity in and around this area. But because I see it's connecting range, I'm observing like what price does when it touches that range. And so we can see here, yes, it touched the range and initiated higher prices quite aggressively. And so as I see that, I'm looking at buys, right? Because I'm saying, okay, if we go back to the higher time frame outlook real quick, we fully expect a bounce from this range. We fully expect a break in structure, and that's our bias. There's no point expecting anything different until proven otherwise. We're just going to let the market talk to us and let the market show us its hand and what it wants to do. So here we are connecting into this range. Speed and aggression leaves IPA right here in the middle. And again, we've got a range initiation, break of structure. So what am I doing? I'm just looking for primaries. I'm looking for any kind of lower time frame primary to form so that I can trade off of it. Now, this was maybe I should have let this fully form, but I was actually real happy with how I got involved. So let's go down to 15 seconds and I'll be able to show you what I was seeing. Okay, so here it is. So we've got this range right here. Right here. So let's back up just one sec. Here's that connector. Here's that connecting range. So we've mitigated here the connecting range. I put a little chevron down here, which to me indicates this could be a potential low. It's sort of my way of saying that, hey, give this some weight because of location, based on pure location. We've also got what I call transitional right here as well. So this is liquidity. So it's a liquidity drop as well, meaning that they've landed here inside of a range right here, creating cause. It's a transitional order block is what they've mitigated. They've mitigated an order block up here, but they've stopped price here. So again, we have full expectation on this time frame that price will eventually come back and get it. It doesn't have to be now. And especially since we're seeing higher prices are being initiated from this location, we've got breaks in structure, we've got inefficient price action. And so we're definitely thinking up, up and away. So based on that, what am I looking for? Like I just said, I'm looking for primary. So here's what I see. Range initiation, a break of structure. They came back down, took the liquidity from there. Again, mitigate a connecting range, right? Another connecting range. They mitigate that and then break structure and continue prices out of there. This range here didn't form until we closed up above here, and I'm already in the market, right, by that point. So how did I get in? Why did I get in? I always want to wait for really my primaries to form, and I believe I did wait for a primary to form because I saw what was happening, right? So I've got to go down on 5 seconds to really see it properly, but I did wait until something formed, okay? So here's my potential primary that's forming, right? We're waiting for that breaker structure at the top end. And then on the lower end of this, we're looking for any lower time frame primaries that could form that could give me basically logic to get in. So here's the range that I saw, range, initiation, breaker structure, comes back in, takes the liquidity and breaks up on itself. You can see I've got the liquidity symbol here on my chart here. This is really, it's a weak looking one for sure. but that didn't matter because as soon as I saw price come back in and take that liquidity, I saw the bounce. And I'm thinking to myself, well, what am I looking for if we're bouncing from the, the potentially the low end of this, potentially forming buy primary? Well, I'm looking for a break of structure, right? There it is. I'm looking for liquidity mitigation, right? LM right here. We've liquidated, we've mitigated something. Didn't really matter what, to be quite honest with you, because once we had all of that check, check, it was like we've liquidated, we've mitigated, we've bounced, we're at the low end of a buy primary, we've taken structure, and so the last logical thing to do was just to enter the market. And so we entered right here, and we got an immediate bounce, which was good, and off and away, right? We're thinking off and away. I didn't really do any trade management, so to speak, with this one. I went break even as soon as possible, just based on location. Also based on the fact that we put in a primary right next to another primary. That's a concerning sign really, because we're stacking liquidity, right? So even though I'm getting the initiation, the market's moving in my direction, I'm, should be really what they're banking on is that we're getting emotionally involved with the trade idea and that everything's working out in our direction. So we should hold, maybe leave stops open, that kind of stuff, or move stops. I'm just all day long, I just go break even because I'm thinking to myself, well, I don't want to get raided, and it's when they stack primaries together, they're typically doing that kind of thing. So I've got primary on primary, and then we're potentially putting in this new primary that forms, right? Sure enough, it does. It comes down. It takes me out. Let's go back now, get out of replay mode. Right? It takes me out for break even. We've got some horrific spreads today due to a lesser amount of liquidity in the marketplace. If we were trading futures, this wouldn't be an issue, but we have got it today because it's like the holiday period, I guess, and they're just opening up the spreads a bit more than I would like to see, but who cares? Doesn't matter. So I get taken out. Yeah, sure enough, I was break even. It did like touch me right there. I've had this happen many times. It's no big deal. So they take me out break even, and I'm watching what happens, right? So now we form another primary forms, and a fourth primary. So we've got actually 1, 2, 3, 4 to 5 primaries in here. By primaries, it's all stacked closed. And so you can see, as you can see, what I draw, big liquidity symbol here, because I'm thinking this is all going to be liquidity. And so now, based upon that one buy that has gone break even, it gives me the knowledge, because I'm seeing what's happening. Not only has a buy primary failed on this side of the screen, right? So the buy primary is now failed once we've mitigated here. Buy primary's failed. It looks like we're taking liquidity. It looks like we're moving price down, and we're gonna, we've already identified targets as far as like where we could go because of the liquidity grabs. So let's move over to my sell side, which is where all the action is. And let's go, this is a 1 minute, but we're going to need to go to a 15 seconds just to really see it all. So shortly after that buy trade, I'm seeing, let's actually pull up both so I can see who was first and who was second. I believe the buy was the first trade. Let's move my mouse back over here. Excuse me one sec. Okay. Yeah, so we're in a buy, we've gone break even, and then you can see this sort of manipulation sort of starts coming into the market. I'm all day long looking at this range here as a potential area where we could be forming that sell primary. Remember, I'm thinking that primary is going to change over. Remember, with the high time frame outlooks, I'm always thinking that this is actually potentially forming that sell primary. So we're looking from a logic standpoint from there, and I'm thinking this is the range from A to B. So I'm thinking this is where we might actually be containing price, right? So based on that, let's look now down to 15 seconds. And you can see we've got range, initiation, breaker structure, stacking of liquidity. No sell primaries have formed yet. And then we see this kind of thing come in here from A to B. They mitigate inside of this range, right? And then they push price down away. And this is the exact location I'm looking for a sell primary to form. So I'm observing, and I'm going to wait until I see something form that's familiar to me, like a lower time frame sell primary. Here's a potential forming, right? So we've got this A to B here that's formed. I think this could be the mitigation. I'm not certain. As price pulls away, we've got this tiny little range that was gathered in here before the break structure. I'm thinking to myself, well, this could be like a little sell primary that's forming in here before we initiate prices down. And so I just wait until I see something familiar. Range, initiation, breaker structure with leaving massive amounts of IPA. Now, in hindsight, I should have potentially let this one form fully, but this was actually a sell primary in here. I'd have to go to 5 seconds. Let's do it just to show you the video and everyone who might be watching. So we've got this range here, range, initiate, breaker structure, comes back in, takes all that liquidity and drops with leaving an IPA. So of course you can see where I'm entering all day long. I'm protecting myself, just trying to get my stop above here. Sure enough, price holds within that range, and I get a movement away. As soon as I get that movement away, I understand that we have not formed and have not closed down here. This is not a sell primary that has formed and has been put in. It's just a potential at this point. So with this activity up here, once I get that movement down and away, again, I go break even as soon as I possibly can just to protect myself, and I get taken for break even on that one. No big deal. So 2 break evens on the day. Not a worry or concern at all. Just shows my amazing understanding of what's actually happening in the market and protecting myself at the correct times. We let the market continue. It creates buy primaries all stacking in this one area. It then mitigates this range in the middle right here. There were 3 ranges that formed inside of this sell primary that I was interested in. I've got origin right up the top. I've got this middle one, which is actually a connecting range, and then I've got this one at the bottom that doesn't really, that I'm thinking the one at the bottom is the unmitigated range. So I was thinking that's the one where we should have the reaction. And sure enough, we did have a reaction, but we didn't get the follow through. So when I'm seeing this middle range, I didn't think this middle range at the time when I very first drew it on had any kind of impact or weight as far as like what it could it hold price. But it did, and after a little bit more analysis, we're able to see that actually it was a connector. So like we've been talking about, all these ranges are connecting, right? So we've got this one range here, bumps down, this second range here connects into that, and this third range here connects into that. So these are just connecting. So does it matter to us if the market makers want to turn price here or here or here? It doesn't actually matter whatsoever. It's just what we have a bias and expectation of actually occurring. And so this middle range is absolutely valid. And I wait and see what happens. I've written it's a connecting range. I've got this whole this whole range drawn out here, and I'm expecting to see something, right? I'm expecting to see something, or I'd like to see something, because my bias is shifting, isn't it? Because I've got these buy primaries all stacked. I'm looking for shorts all day long because of the liquidity that's stacking in this area. So as I start to see this form, we get the liquidity grab, comes up here, and I'm thinking to myself, as long as we can close below here, that's going to give us the first sell primary that we have had in this movement, up and away. The first one that actually closes. Remember, these didn't close. This didn't close here. I've left them on drawings on here so I can explain why I got into that trade. Price starts initiating away. I start to see exactly what's happening. I want in on the market, and I put in my my sell tool right here. I'm thinking here because this is where we've got a transitional order block. We formed the sell primary. I allowed it to form, and then I'm left with 2 ranges. I've got this one range in here, which I'm thinking all day long we're going to come back to and touch. And then I've got this one up above it, which is the transitional, which is where I actually have my limit order sat, right? Because I'm thinking this is where we've got more reasons to come back to here. They're very manipulatory today, and it's like, they just want to come back for as much liquidity as they can. They initiate lower prices. Okay, so I don't get tagged in on this one. And then we initiate lower prices, range initiation, breaker structure. These are my what I consider the bread and butter trade all day long. Got this lovely range here, creates just a tiny bit of liquidity, pumps down, break structure, and then what do? Up and away. They take that liquidity and initiate with IPA away, breaking structure, I might add, double structure here. So it was very good looking trade. So immediately got my limit order. As long as I get my limit orders safe at the top, very good. Didn't enter on this one because of, and this is probably like the best entry save I could have done all day long. I did understand everything, but it was this. If you look where we bounce from, drawing in my arrow tool here, we're actually bouncing from, let's go over onto the buy side. Here it is. I've got the arrow here. We're bouncing from the last known buy primary. And by last known, I'm talking like in this regard, it's the last known double buy primary. It's the last known buy primary on this whole run up. So they've taken this one. They've taken this one. They've taken this one. They've taken this one. This is the last final buy primary that could possibly hold. So what do? We expect a bounce from there, and we're not interested in anything other than that, really. We're just expecting a bounce. We do believe we're lower prices. It doesn't matter to us that we could be bouncing. We don't know how high we'll bounce. I've still got my limit order for this trade here with this transitional. I've still got my limit order set and ready to get in, but they don't give it to us. Instead they take, I have to go on to maybe a 5-second to see this clearly, but they take the liquidity from above this primary range here. You can see the high I've got drawn here, and you see how they actually took it above. They took liquidity. That would have gotten me stopped out, but I was smart. I didn't enter, and that would have taken me out. And I didn't know they were going to stop there. Honestly, I thought we might be pushing up for higher prices. Then they immediately turn around and form the sell primary, right? So now we've got a sell primary formed. Now I've got something to trade off of. Now, if we have a little look at what's inside of that sell primary, we've got this range here. We've got two ranges actually. We've got this one here and then this range here. This is the range that I expected to hold. But what they've been doing a lot today is connectors. And so if you look at this, if I zoom in nice and big, sorry, we've got this range here that we expect to have the reaction from. As soon as price broke down out of that range, it came back in and created this connector range, right? And so we could now visualize things a bit like this, how I'm drawing on here. So this is the range now that we're expecting to be playing off of. And what do? We get just a touch to the open of that, taking the liquidity, boom, returning and mitigating away. So as I see this occur, now I'm thinking to myself, basically, I'm putting like a mental chevron here, right? I'm thinking, boom, that's my new high. And now I just got to observe price forming, the new sell primaries and the new ranges away. So we've had that mitigation. We're pulling away. We've got this range initiation, and what I'm looking for is something familiar to me, like a formation of an order block that breaks structure, right? Range initiation, mitigation, continuation that we seek all the time, and that's exactly what happens here. So let me come down onto 5 seconds just so we can see it. So I've got this beautiful looking full-bodied order block right there, ranged up, ranged down immediately. These are high probability blocks. And so when I see that and the break-in structure, all day long I'm thinking to myself, we're going to be coming back to mitigate here before we initiate low prices again. And we didn't get the exact touch that I was looking for, but I did get an entry available in this area. So I'm looking for something more like this kind of thing, right? And I've got my trading tools open. I've got my sell. I'm looking to sell at market. Got my stop losses all filled out. Look, we're on 1.5 pip stops. No need for 2 pip stops today. And I've got my order right here. I click sell right here. I'm pretty sure price was literally right there. And this is where I get filled, down here. And I write on my screen here that this is an inhumane fill. And sure enough, it was inhumane to me because we didn't even touch prices this low. And yet I got filled at a much lower price than we were ever even trading at. And that's all just due to the crazy spreads today, or the higher spreads, I should say. Doesn't matter. I was on the correct side of the market, and market moves away in my direction, right? And Now let's talk about trade management on this guy. So down to a 15 seconds. So as we're initiating lower prices, we're initiating away. I'm still observing everything that's going on. I have an expectation of an area that we're going to come to as far as price and where we should be bouncing from. Then we start creating a buy primary in and around this area. And so this is why I changed my stop loss to above this high, basically, or above this range here, due to the buy primary formation that's occurring. So let's go have a look at that. Where are we? We're over here. And I left it drawn on the chart so we could all see it here as well, even though it's invalid on the buy screen. You can totally see it. So I'm thinking that we've, if I zoom out, I'm thinking that we've just dipped in. Here's the liquidity below here. I'm thinking that this is the range that's dipped in, is potentially creating a buy primary, right? Now, if it's creating a buy primary, it's going to take me out. I haven't entered high enough, right? I'm just looking at where we are, and so I'm looking for potential buy primaries to form. Here's a range initiation, they break structure, and then this range here comes in and starts moving back up and away. So as price is here and moving in this direction, step, I'm thinking to myself, well, if it goes above this range here, above this range high, then that is the valid buy primary that is formed. I do not want to be in the market if there's a buy primary because I'm on the sell side, right? Why would I want to be jumping in or having to, mess around with stop losses and stuff if a buy primary is formed? Yeah, they can fall over. Yeah, they can, fail, but that's not what I'm expecting. I'm expecting if a buy primary forms, I'm expecting a buy primary to hold. Same thing with the sell primary. So this is potentially forming if we get a breaking structure up here. And so that's why I move my stop, as you can see over here, right to the top of that range, because I'm not willing to let it sort of take me out. Now, it doesn't really matter. I could have had it at break even. It would have been only, 0.3, 0.5 of an R, not too much. Then we get an initiation away and we get breaking structure. Okay, so everything's good. We're going in my direction again. We're moving in my direction and we're making further gains, right? And then we get the range initiation breaker structure. So as soon as we get the range initiation breaker structure, I'm thinking to myself, well, I kind of need to move my stop now. I need to move my stop back to break even because I need to allow movement and room for the market to mitigate the correct sort of areas that it needs to mitigate. For example, this range here is a weak range. It's a range initiation breaker structure, but it's really there just to create liquidity. Look what it mitigates. It's a transitional. What do we know about transitionals? They always come back to get mitigated. We just don't know when. It's relative to the time frame and the chart you're on. So I moved my stop back to break even, which is an amazing move because, yeah, sure enough, we did pop back up. Whether or not that would have taken me out, I'm almost certain it would not have, but it's nice to have that extra bit of room and to understand what's going on in the marketplace as well is just brilliant. And that's when I can start to see we break structure again. We've created a new sell primary. What does that mean to me? That means I can play off of it. And so we get this, I'm looking at from the B to C leg. Here's the B leg, here's the C, and here's A. So we've got A to B, and then falls down to C. At the moment, we break that the A leg low. We look at what happened between B and C. Well, it's literally just solid one directional price action, right? With the exception of this range initiation breaker structure. So all day long, I'm looking at this range. All day long, very interested in it. And what am I looking for? Exactly the same thing. Range initiation, break of structure. Look at, and then I just click sell. So I click sell. I think my tool is more like here when I'm clicking sell. Again, I get the inhumane fill. It's basically just spreads today. It's just ugly because it's like I'm getting these fills at price that I'm not even in at. It's like I'm not even filling at those locations. As soon as I click sell, I'm just getting filled like I'm much lower. I had to have my stop. I think my stop was 1.5 on this, and immediately as soon as I see it's 1.5, I can see where it's filled me. I can see where my stop is. The stop is like bang in the middle here, and so I just spread out my my entry to 2.2 pip stop loss. Why do I do that? Because I want to cover the high of this range. This range is where I'm expecting price to hold, and so I'll put my stop just to cover it. Now these, thankfully, are 0.5% risks. They're not doing anything crazy on these. I've reduced my risk today because it's a holiday and whatnot. And so I can afford to move my stop loss, still afford to move my stop loss here, and I'm still not even at 1 hour. I'm basically at like maybe 0.7 hour when I've entered at a 0.5 hour. So I'm pretty comfortable with that. Being able to move it like that was okay, and especially with the weird fill. So now I've got 2 trades short. My first trade's looking excellent. It's obviously break even. And then the second trade is initiating away, right? So we're initiating low prices, we get the break in structure, and it's at that point then when I'm like, as soon as I see that break in structure, I'm thinking to myself, yeah, I want to start protecting this second trade. We've got lots of inefficient price action. Initiates away. And so we wait for something to happen. And I actually write this on my screen, but I go, this is a high risk move, but I'm leaving my stop loss open until a new sell primary forms. Why? Because of the break in structure. What do I mean by that? Well, we had a fairly major structural break down here. And so because of that, they more often than not will range before the break the structure, and then bob straight back up to create a sell primary before initiating lower prices again. And so having seen that just millions of times over, I'm expecting that. And so I wait for something like that to occur. It does occur, we create a sell primary, but all of the mitigations at the top are transitionals. So immediately I know that we're actually not looking for much lower prices. We're really just expecting that these are going to fail and the highs will be taken. Because of that, I do protect myself and go break. I didn't go break even on this. I just put my stop actually to above the sell primary, because if we're going to take the sell primary, then there's a super high chance that we're not going to hold price there. Sure enough, that's exactly what occurs, and I get out, not break even, took some profit on that one, not much obviously, but a little bit, and had my stop loss there. These are all transitional order block mitigations, and so we expect them to get taken, and sure enough they did. Now that's my trading morning / day. So if we look though at what went on, now we can see from our buy side, like what actually happened or is happening, right? Why would we initiate higher prices from here? This range is basically nothing on here. So this is definitely transitional. This is definitely liquidity, and we're going to come get it at some point. But why here? What's special about here? Well, I believe it's because, number one, it's this connecting range, the liquidity from the connecting range that got taken, and we land inside of a buy primary right here. It's for those reasons I believe that we are initiating high prices, but it's hard to guess. It's hard to guess other than that the TOBs. The TOBs gave us a clue that we're going to go higher, but it's a tricky location really to guess that you're gonna have some sort of higher pricing from. So I leave all my my entries, leave them all, just break even, and just letting price do what it wants to do. So that was the end of my trading day. We got some really good entries, got some good movements. Nothing clicked on a 10R, but we definitely did go to took some small sort of little profits off on the way down, and was able to capture just a tiny little bit today. It's a good day just to sort of observe price action, to observe what's happening in the markets, and to see their price action and how they are moving price from A to B. It's a really good observation day, I think, actually. So aloha to anyone watching. Hope you've had an amazing holiday. Hope you're having an absolutely fantastic day. Hope you're crushing the markets. Hope you're making some sick R. And aloha, and I'll speak to you soon. Let's get out of here.